Live free or die, man. New Hampshire has passed the state budget and it speeds up the end of the interest and dividends tax. We're going to explain what that means and discuss an 8-year strategy for lowering taxes in New Hampshire with Greg Moore, New Hampshire State Director of Americans for Prosperity. This is a sponsored segment by Americans for Prosperity. You can learn more about them and get involved by visiting americansforprosperity.org. Greg is the New Hampshire State Director. Definitely give them a follow on Twitter. They're great to see what's going on with a different take on politics in the state that I think is an important voice. This is the New England Take. I'm your host, AJ Kierstead, thenewenglandtake.com. Like and subscribe if you're checking this out on YouTube, and be sure to subscribe to our podcast feed on all major podcast platforms. Episodes actually released before the video version. Welcome back to the show, Greg.
First of all, thanks for having me on. We really appreciate it. The interest and dividends tax has been something that we've been working on for a while now. It's been something that a lot of people don't appreciate, that New Hampshire does have a tax on income. And, we like to say we're income tax free or income tax free, but all those national organizations that sort of rate states, they put New Hampshire as no income tax, and then they put an asterisk next to it because we have a tax on interest and dividends income. And it's a real issue. It's a real issue because there are a lot of retirees. I've known several retirees, in fact, a couple former state reps who moved out of New Hampshire precisely because of our interest and dividends tax. They moved to Florida, which doesn't tax any income at all. Now, to be fair, Florida does have a sales tax, and we don't have one of those. But when I say move, what that means is they spend, instead of spending 3 or 4 months in Florida in the winter, they now spend 6 months plus 1 day in Florida, and they still come up here. So they're still buying a lot of their goods here. They're still doing a lot of activity here for the time they're remaining in their place. But the bottom line is that from the standpoint, we're losing maybe 3 to 4 months of their time and effort, and we're losing a lot of their focus. I know one particular state rep, Will Smith, who was a state rep from out in Newcastle, used to be involved with a lot of angel investing, funding a lot of startup operations. And he used to do that here in New Hampshire, but once he moved to Florida, he still has his home in Newcastle, he no longer does any angel investing. So we're losing people like that. At the same time, you look at a state like Massachusetts, which just passed a very regressive tax on people with incomes of $1 million or more. And by the way, you say, oh, that sounds like a lot. But the reality is, if you sell a home for more than $1 million in Massachusetts, you've certainly been triggered the millionaire's tax, and now you have to pay 9% on that. So there are a lot of people in Massachusetts who are looking to leave thanks to this new tax. And as a consequence of that, being a place right next door where they can stay close to their families, stay close to a lot of the people that they know in the area, as opposed to simply moving to Florida. So if we can give an opportunity for those folks to come into our state and help our economy, that's going to be a huge plus. I mean, the biggest problem we have is the same problem we have across the board. We have no place to put them.
Right.
The good news is that people like this are looking for $1 million houses, so they're probably not competing with the 20-year-old who's trying to buy their first home. So I don't think it's too much of a competition there. But there are certainly other people who are going to feel this pressure. But I think it's great when you bring people in who are going to be high earners, who are going to help our economy, because that has an effect upon everyone. Maybe some of these new people who are moving in become the new angel investors who are investing in startups in New Hampshire, and there's a lot more capital to be found here for people who have the next great idea, the next great big company, and because we want those to start right here in New Hampshire. So for us, and then the last important piece about the interest and dividends tax, I think it's important to understand, the majority of tax filers of the interest and dividends filed as a senior filer, so 65 plus. So this is largely a tax on seniors' retirement incomes, and frankly, it's rough enough to try to gather enough of a nest egg to be able to retire these days. But when you're doing that and suddenly the government's coming in and taking a good chunk of that away, then that's obviously a disincentive here, and it also makes life harder, particularly when you add in not only that tax, but you're also adding in the high soaring costs of energy and the other costs of inflation. It's been a rough go of it for a lot of our seniors. So this is one thing we can do to sort of offset those costs for people on fixed incomes.
For those that may not be aware of what we're talking about, specifically, when we say interest and dividends tax, what exactly does that mean? Give like the 60-second like explainer what that stands for.
Right. So this is a tax that's actually been around for 100 years. And it came in about the same time as the U.S. income tax. And what this is a tax on money that you've saved. So you save money and you either put it away in an interest-bearing account or you invest it in maybe a stock or something, and suddenly that stock pays a dividend. Or that interest-bearing account, you have your savings account or some other money market fund or something like that. They make interest, and that money is subject to taxes. And up until last year, it was 5%. On January 1, it dropped down to 4%. On January 1 of 2024, it'll drop down to 3%. And then on January 1 of 2025, it'll go away entirely. So that's included in the state budget. So for seniors who are looking to retire and maybe they don't want to be in as risky options as maybe young people who have a little more runway can get into a little more risky. I mean, because that's the thing, young people can avoid the IND tax because you just put money in funds that do all dividend reinvestment and things like that, and you can watch your money build up faster because you're trying to build up faster as a younger person. But as a senior, you can't take that type of risk. You have to put your investments in a lot more stable things like T-bills and things like that pay interest, and that interest had been taxed by this tax.
Why is it was set to 2027? It's like a very long plan originally for that. So it's great to see it was going to 2025, but it just seems like a weird year for that to be the case.
Yeah, so in the last budget, this 2021 budget, Governor Sununu included this in his budget where he had a planned phase out. And we've been working with the governor's office, and this is something that he's been fantastic and instrumental on working towards. And he included a phase out, but for the first year of the budget, it didn't actually reduce it at all. So it was only in the second year of the budget it had the first step, and then it would take 5 gradual steps to go away. So that kicked it out to 2027. And so this year, we had conversations with the House, and we were talking with them, and we said, look, let's just get this thing done. The money's coming in right now. Our economy's booming, largely because of some decisions we made from a tax perspective a few years ago, 8 years to be fair, about making our taxes on employers more competitive. Our economy has been thriving, and as a result of that, it gives us the opportunity now to just get that tax off the books. Frankly, the sooner we get it off the books and people can prepare for a time when there's no interest in dividends tax, so budget writers have that knowledge that it's not going to be there, and so they can start planning accordingly. I think that just made all the sense in the world. And the House agreed with us. They put it in the House version of the budget. The Senate agreed with us. And the governor said, look, this was my idea to begin with. So sure, I'll sign off on it. So yeah, so we had a lot of luck with that. So it was. I think it was a great opportunity to just put this last income tax in New Hampshire into the dustbin of history.
Now, many Democrats have said, like, oh, you're going to be messing up the budget for the future. Look, we need this money in order to fund such and such things. I mean, is that valid in any way, according to what you see?
Well, I would say that, but the same legislators and Senate reps and senators who had said that were the same people who said that if we cut business taxes back in 2015, that it would, and this was Governor Hassan's words, blow a $90 million hole in our economy. The opposite occurred because our taxes became more and more competitive, and we were able to actually drop our corporate tax rate now below Massachusetts. We were actually above Massachusetts. According to the Tax Foundation, we had the 3rd highest business taxes in the country. And we've made a series of reductions over the course of the last 8 years to get to a point where we are now very competitive. We are actually below Massachusetts, below, well, it's harder to compare Maine and Vermont because they have graduated taxes, whereas we have a flat tax. But we're generally speaking, for larger corporations, we're pretty much below every state in New England, and that creates another competitive advantage. Not only do businesses want to come here because they're being taxed less, but they also want to live here because they're being taxed even less there too. So it's really a double whammy in terms of opportunity, and our economy has really been blessed with just massive growth over the course of that time that is absolutely offset the loss in revenue. But more importantly, that is a result of the fact that our GDP growth has just taken off. And that doesn't just mean more taxes, it also means more money in the pockets of average everyday New Hampshire citizens. And so I think that the good news is that, for example, right now, we have the 1.9% employment. The bad news is if you're an employer trying to find workers, it's a tough environment to try to find people. The good news is that if you're someone who's looking for work, you're going to get a base pay even for entry-level jobs. I mean, I drive down to the store and I see Market Basket in my town saying starting at $17 an hour. That's fantastic. And I mean, I've seen other stores where it says starting as high as $20 an hour. And when you start seeing that, that's great. But more importantly, employers can't be as picky, and I think that's an important component as well. Employers have started to drop their job requirements. In many cases, employers who in the past had required a certain number of degrees or a certain number of years of experience don't have that luxury. But what that means is that that's an opportunity to get that type of job that someone might not have had before. And so I think that's something that people don't realize is that right now in New Hampshire, it's easy to go into a career and field of your choice where your employer will train you to do the job. And they won't have such a high expectation that you're going to come in with all those skills already pre-built, and that's really great for young people. And I think we're seeing that because we're actually seeing we've reversed a demographic shift where the number of young people moving into the state is greater than the ones leaving. And again, we can go back to housing and trying to figure out where all those people are going to live, but ultimately it's a great opportunity for people trying to find a job of their choice. And we're thrilled to have played a part in that.
And they're more likely to stay with those employers. I mean, if they have an employer that's willing to kind of like, hey, we'll kind of make you a part of the family. We'll train you. We'll make sure you get informed and everything. We're going to give you a decent salary out the gate, as opposed to, hey, in 5 years you're going to make $10,000 or more or whatever. It's out the gate. They're getting that investment in this company, and hopefully it slows down this cycle, especially that I've seen in my generation as a millennial, where they work at a company for 1 to 3 years and they transition out, and it's problematic for companies that really want to plan in the long term.
I 1,000% agree with that. If you're an employer, you have to have a plan for not just hiring the people today, but to grow and build them, which means you have to be focused on their development and their growth to keep them. Because once you've made that investment in them, you want to keep them with you. And so, yeah, no, it's a virtuous circle that benefits everybody. And so, and a lot of this has been driven by tax policy. And you look at the GDP growth of our neighbors, look at the 7 years prior to when we started this regime, and you look at 7 years since, we have absolutely escalated how quickly our economy has grown relative to our neighbors. And frankly, a lot of it's at their expense. Because a lot of the people a lot of the best workers are working there are coming here. A lot of the investment that was going there is coming here because people want to invest in New Hampshire, and we see it all the time. It seems like you open up a copy of a business section of a newspaper or magazine that's focused on business, and it's all about this company's moving to this town, this company's moving to that town, and that's what you want to see. That's obviously the big thing, and I know there's been some reporting. We have record low bankruptcies in New Hampshire of businesses going bankrupt. So not only are businesses coming into New Hampshire businesses are sustaining and growing.
All right, so I want to leave enough time here to kind of look at what this 8-year strategy is in order to lower taxes, so that Chris Damon, who's the grassroots organizer,
it started 8 years ago, 2015. Yeah. Actually, we began it 9 years ago in 2014 when we, through our sister organization, Americans for Prosperity Foundation, put together a white paper, a study on how New Hampshire's high business tax rates were holding the state back, and saying that we're losing so many opportunities because we're not making ourselves more competitive. And then in 2015, we had a budget that was passed that included the first 2 rounds of employer tax relief. And that started on January 1, 2016, and then And then later on, there was another one in 2018, and then in the 2017 budget, there were additional rounds. And so now we've seen 5 separate rounds of business tax relief, and as well as we're now seeing 2 rounds of, and then the final elimination of the interest and dividends tax. And these are all great signs for not only have been a great signs for our economy, but obviously great signs for the individuals who, particularly like seniors, who now won't see as much of their retirement money taken away from them.
Yeah, and what about businesses on the ground? I mean, are you seeing growth as a result of this directly?
Absolutely. Well, I'll caveat that. There's growth, but not as much as they would like because they just can't find the workers. So if you talk to any employer, they'll say, we'd love to add, you ask them, we'd love to add X number of people. And you go and you talk to them. We have 50 job postings, and I talk to those employers all the time, and they just like, we have the business, we just don't have the people. And try reaching out to a contractor right now to get some work done, and they'll all tell you, it's like, look, I have so much more work that I could be doing, but I just can't find the help. And so really, that's really the biggest challenge we're facing is a workforce challenge, and that's to a degree sort of coupled with the housing problem that we're having, and because people just can't find places to stay in this state, and so one of the things that we're also working on is trying to find some solutions in the housing space, because that's probably the thing that's ultimately holding back our economy right now the most, is inability for people to move into. And so we're thrilled to see that the legislature in the last state budget passed a land use docket, which hopefully will sort of rein in some of the more overzealous zoning and planning boards who've been stifling some of the development that's necessary to see the type of housing growth that we need if we're going to be able to meet the demands for all these employers. It used to be a given that Massachusetts was taking a lot more people in to work in Massachusetts than were Massachusetts people coming to New Hampshire. Well, we're starting to see that change. We're starting to see more and more companies have to go into Massachusetts to find workers. And of course the workers hate that, right? Because not only do they have to come to drive to New Hampshire, but they also have to now pay Massachusetts income tax for the privilege of working in New Hampshire. And so we have, this is an important nut to crack. And so we're thrilled to see the legislature taking important steps like creating that land use docket, because in the past, if a city or town in their zoning and planning had denied you and not done so under what were appropriate or legal terms, it would take you 3 years or more to get an answer. Now it's going to take 5 months. And that, I think, is going to have a huge impact. Moreover, there's going to be one judge who's going to be overseeing all of it. So there's going to be a level of consistency and uniformity that people will be able to see, so that it'll actually help the zoning and planning boards know what they can't do anymore. So they can't offer a denial, or they're just going to go to court and lose. And so this is I think a positive step to allowing people to actually have the ability to develop more on one hand, but on the other hand, regain more of their property rights.
Yeah, I mean, I'm going to be speaking to Jeff Feingold of the New Hampshire Business Review about this in another show soon, but I mean, they posted Portsmouth takes second place on Fortune magazine's best cities for families. City finishes ahead of Cambridge, Massachusetts. It really goes to show people want to be in New Hampshire, they want to live and work here, and I think a lot of that has to do with the work that Americans for Prosperity and other organizations are doing in the state to make sure that we're advocating for companies and workers, and hopefully in the future it only gets better and better. Thank you so much, Greg, for joining.
Awesome. I really appreciate it, AJ. Thanks for having me.
So that's Greg Moore. He's the New Hampshire State Director of Americans for Prosperity. This is a sponsored segment presented by Americans for Prosperity. Learn more about them and get involved by visiting americansforprosperity.org. Once again, thenewenglandtake.com to get more from the show. Subscribe to the podcast, like and subscribe on YouTube, and we'll talk to you in the next episode.